Welcome back to Investing with Confidence. As always, I am your host, Joshua David, talking about the do's, the don'ts of the financial markets and how to get started trading and investing, especially if you're brand new and you want to learn how to get started right. We have these investing classes locally here in Denver, Colorado, and Bloomington, Minnesota. We had tickets, so I gave away to. I have a few left, so call 888-682-6466 right now. That's 888-682-6466 for 2 tickets for an investing class. When you get set up with this, you're also going to receive some beautiful free stock picks. So if you're just tuning in, Al was shedding some light on timing the market, how you buy and sell stocks, hopefully at the right price, where to get in, where to get out, but also our core strategy that Online Trading Academy has, which is designed to teach you to make better investing decisions. So, Al, with better investing decisions, we have a lot of listeners that are looking for, it's always about looking at more income strategies. People want more income strategies in their life, but they don't want more jobs. Some people have a job, some people have 2, and that's what you're taught. Work hard, go get another job. Well, there might be opportunities in the markets for income strategies. So let's talk about that. What are you seeing right now with some income strategies with all the markets that are out there? And what can you do right now to help our listeners get started and learn these new techniques and strategies? By the way, they're not new, actually. They're just a little bit different.
Yeah, and I think it's really important for people to understand the importance of income, being able to generate additional income. And we've stated this before, but the people that are truly financially secure in this world have multiple sources of income, but it's not multiple jobs.
Yep.
Most people have one job, and that's their only source of income. What happens if that job goes away or something happens where the income maybe diminishes? Maybe you can't work full-time. That has a huge impact on your financial life. And now more than ever, I think it's important to understand how to generate additional income. The reason I'm saying that is that people have become accustomed to high returns in the stock market, and that's not something that you can get used to because it's not going to happen going forward. And it's not just us saying that. There are a lot of financial experts out there that are kind of issuing warnings about the returns going forward. Barry Bannister, who's the equity strategist for one of the major firms, said that the next decade won't be as easy as the last one for investors, and he's actually looking at the next decade as giving 0 returns. That's 10 years of 0 returns.
That's very similar to that Buffett indicator we talk about all the time.
Well, right, and the Buffett indicator is actually showing the potential for negative returns.
Yes.
Can that happen? Has that ever happened before? Well, just as early as 2000, the year 2000 to the year 2010, the returns were actually negative 0.9%. So if you invested in 2000, 10 years later, you were negative. They're saying the same thing could happen again now. And what they're saying is that the buy and hold strategy that most people are used to isn't going to work in this kind of a market condition. What this Barry Bannister is recommending is that people do some different things. And they actually aren't different to us. They're exactly the things that we teach our students. But he's saying look at alternative assets, including commodities, and then stock picking strategies. Another person that I think some people may have heard of is Mohammed El-Arian. He was one of the I guess maybe the founders of PIMCO. He said the current landscape is going to favor stock pickers. It will be a market of great differentiation. What he means by that great differentiation, is that a lot of people are going to do very well, and a lot of people are going to suffer financially because the market's going to be different. Stock pickers mean you have to be more selective about what you're investing in. And it means that maybe that long-term strategy isn't going to work over the next 10 years or so. The potential is there for you to lose money. That's why the income strategies, which are short-term, are probably a much better solution during this kind of market condition, because you can be in and out of a trade or investment in a shorter period of time, not worrying about having to hold on for a decade or 2 decades to get a return.
Yeah, it's funny you say, you're talking about stock pickers. It's you look at the stocks right now, the majority of them, we talked about this, I believe it was 2 weeks ago, right. The majority of them in the Dow are negative, and some of these are down 40, 50, 60%.
Yeah, same thing in the S&P 500.
Same thing there, yeah. These stocks, so you have to find the right stock, but how do you do that? You have to learn from people that have been in the markets for many, many years.
Right.
And Online Trading Academy, our sponsor, actually has, about 60 or so instructors. A lot of these people have came from the floors of the exchanges, and they're guiding people through their investing decisions. So hopefully you're making smarter investing decisions. But it's about picking the right stocks, but also where to get in those. I mean, if we have markets that are going down, there's strategies for down market.
Sure.
And I think a lot of people that you talk to in these investing classes are like, wow, I didn't know there was a down market strategy. Just think about it as a baseball pitcher. If a pitcher has a fastball and that's it, are they in the major leagues?
Not for long.
Probably not, but they have a fastball. They have a curveball, a knuckle curve, a slider, a changeup, more tools in their tool belt, right? So you have more opportunities for all conditions. If you're throwing a fastball, you're going to probably throw a lot of what do they call it, meatballs for home runs. Mm-hmm. So that's where understanding these techniques and skills that that Wall Street is using, but now knowing that they are available to you, the public. So I want to give away tickets to an investing class that, Al, you teach here locally. We have actually physical classes locally here in Bloomington, Minnesota, and also Denver, Colorado. And these are classes where we've taught thousands, just like you, our many strategies, which are designed to teach you to make better investing decisions. So get your phones ready. I'm going to give a phone number and a text here. Actually, I'm just going to do a text here. So if you're a texter, get your phone ready. Text the word INVEST. That's text the word INVEST to the number 484848 right now. When you do that, we're going to send you a link right back to register for one of our free classes locally here in Bloomington and also Denver. And when you do that, you're going to get a quick start kit that actually has some free stock picks in there. So don't forget, don't miss out on that. Text the word INVEST to the number 484848 right now, and then we'll act. If we don't see you register for that, we'll help you out and we'll get you a call and find a date that works the best on your schedule. So, Al, with knowing that there are income strategies out there for the public, and you were talking about picking the right stocks. Now, we all know, and I think our listeners probably know, that stocks are pretty expensive right now, even though they've dropped some. Now, how do you be more capital efficient? So I actually read an article, I believe it was a while back, I believe it was Yahoo Finance. And it said something along, don't quote me on the numbers here, but something about 70% of people that are not in the market feel it's because they don't have enough money.
Correct.
So the stock market actually takes all of your capital. It requires a certain amount of capital, and then it's unavailable to be used for anything else. Talk a little bit about how to be capital efficient with the monies that you do have. That way you can understand, you can get in the markets with smaller amounts because brokers require less.
Yeah, and that's exactly right. The cost of a stock position is very high. I mean, you want to own some Amazon, that's $3,000 a share. Apple up over $170 a share. These stocks have gotten extremely expensive. It used to be years ago when the price of a company stock approached that $100 level, they would split and allow more people to participate. And that just hasn't been happening as frequently.
By the way, when stocks split, you don't really get more. It just offsets anything.
The value of your portfolio or your ownership doesn't go up or down in value, but the number of shares you have go up, but the price of the shares go down.
A lot of people think, though, I got a lot more. You actually don't. It offsets your value. Your dollar amount stays the same.
Yeah, the benefit there really is to a lot of the people that haven't been in that position before. It allows them maybe to take a position in something that previously was out of their range price-wise.
Yes. Yep.
But in answer to your question, how do you maximize the value of what you have? How do you have a small account and still be able to participate in high investments? You use leveraged assets. And by leverage, we're just talking about basically the same thing that you have with a mortgage. When you buy a house, let's say you buy a $400,000 house, maybe you put $40,000 down. You now have a mortgage, but you now actually control the value of a $400,000 investment for $40,000. You can do the same thing in the markets, in the financial markets. And we're talking about assets like the futures market, the foreign exchange market, the options market. Those markets, those investments allow you to have a small amount of money in a margin account, but control an investment that may be 10, 50, 100 times the value of what each dollar is in your investment account.
Yeah, and just as an example, if in the futures market, you buy contracts.
Correct.
Right? It's very similar to shares, but it's actually a contract. In one contract, will actually control 100,000 barrels of oil. So that's buying power. You're taking in, and I believe that contract, I could probably look it up, but it's probably maybe 3,000 to 5,000 that you would need in your account to control that. That's my guess. I'd have to look at it, but it's just taking that smaller amount. So instead of needing that, $50,000, $100,000, you're allowed. It's called margin, to use margin in the markets to start with less.
Right, and the important thing is, and this is probably the number one. Well, it is the number one thing that we teach our students is risk management. So you can participate in a much larger investment, but still know that you are protected. But it's the education on those assets that I'm talking about is not readily available to people. It's certainly not taught in school. Not much or any of the financial investing or financial world is taught in schools. But those other assets, those leveraged assets, are for the most part short-term trading assets. And it really gets down to the point where it's too much work for financial advisors to have portfolios that are short-term, where they have to maybe deal with 200, 300, 400 clients and maybe deal with them weekly, daily, or monthly. It's just not possible to do that. So their go-to is to put you in something that's long-term that maybe is held on to for decades. I can guarantee you that traders for companies like Goldman Sachs, JP Morgan, hedge funds, they're not putting together a portfolio one day and then just sitting on it for decades. They're trading those maybe on a daily basis or weekly basis. They're active in their trading. They're just doing the same thing that you can do, but they're not teaching you how to do it because it's not a practical way for them to do their business. When you're talking about futures, you mentioned futures, that market really was developed for major corporations and major players like airlines when they have to look at the cost of fuel. That's one of the biggest expenses they have. They need to know what fuel is going to cost them going forward, so they will do contracts on fuel so they know what they're going to pay in the future. Companies like General Mills and in Cargill, they deal with grains. The same thing. They need to be able to understand what the costs are going to be in the future, both if they're buying or selling. And then farmers do this. A lot of farmers are futures traders, and they're actually doing that because they don't know when they plant a crop. They're not sure what the value of it's going to be when they harvest it. They don't know what the weather is going to be like. They can't control that, but they'll do a futures contract, so they'll have locked in a price, and they know that there's a value there in actually planting that crop. Maybe there isn't. Maybe they do want to go to something different. But the great thing is that market is something we can participate in on a short-term basis.
Yeah, that's the great thing about having different assets like futures and Forex and options, because these income strategies in there, you can utilize less capital, and this is just not us telling you. It's required by the broker. You can do less. If you're going to trade stocks and you want to trade more than 4 times per week, you're required by the broker to have $25,000 in your account.
That's correct.
It's called the pattern day trader rule. So hey, there's ways around and markets that give you more opportunity for less. But you got to learn how to use these. You have to use responsible capital management, all that stuff. And Al, you teach that in these investing classes, what these strategies are. If you want to discover what these strategies are, you have to get started and you have to learn something a little bit different. And I talk about this every single week. I said, I think early on the last segment, they're not new. They're just a little bit different. So call right now. Get your phone ready. I'm going to give away some tickets to this investing class. Locally here, we actually have physical academies all across the world, specifically here in Denver, Colorado, and also Bloomington, Minnesota. Call 888-682-6466 for 2 tickets for an investing class, also an insider's kit that will help you get started right away. That's 888-682-6466. Call right now. If you're a texter, text the word invest to the number 484848. You're going to get a link back with our registration page. Pick a date that works for you. We have classes on the weekdays and the weekends, also at night. Al, coming up next, I want to talk more about some income strategies, but also utilizing that during retirement. So retirement strategies that actually might even include a little bit of income strategy. Coming up next.